any kind of demerger?
No, as of now, nothing, on the table.
Okay. And as you spelled out, there are 450 outlets in the country. Are you
Yeah.
intend to increase more outlets, sir?
Yeah, definitely. We are, penetrating the domestic market, with additional outlets also, and we are also placing the product on all the e-commerce channels and through distribution network also. So, like the small home furnishing shops, which is come under the dealers and distributor network, that is also being expanding.
Okay. So any numbers on new outlets to be open in year or in coming period or something like that?
No, we are not having any numbers as of such, but we are definitely, enlarging our base in the domestic market.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from Giriraj Daga from Visaria Family Trust. Please go ahead.
Yeah, hello team. Couple of things from my side.
Sorry to interrupt, Mr. Daga. May we request you to please take the phone off speaker because your voice is...
Now it's okay?
Yes, much better. Please proceed.
Yeah. So, obviously we saw that the towel utilization has fallen drastically, sharply from the quarter-on-quarter basis. Somewhere about a number calculated coming about somewhere 41-42% on the last quarter. In between. So, how is I understand that you spoke about destocking and some uneven, but how is what period happened, and how is the response in the January so far? Is that destocking continue?
So, see, once you must understand that this is a destocking means that they are reducing the inventory levels. So, as such, sales is not, degrowing, it's a, flat. So we expect that those inventory levels are now near to replenish, and we expect the normalcy to come in quarter 4, and the growth will come in quarter 1.
Okay, you guided about 50% exit utilization for fourth quarter in bath linen.
So both bath and bed, we are expecting 50% utilization level to exit in quarter 4.
Okay, and any number you would like to put for FY19 utilization number?
19, we've already given the guidance for our, bed linen, 50 to 60% kind of a utilization in the entire year.
Okay.
And for towel, we expect the, double-digit kind of a growth in the volume.
Double-digit growth in volume. And what was the, sir, forex gain during the quarter?
What is forex gain? The forward which we have realized?
Correct. For the forward which we have taken.
We are taking average of approximately 15 to 16 crores a quarter.
15 to 16 crore in the quarter. Okay. My last question is regarding, sir, the pricing scenario. Considering the cotton prices has again been looking upward, and even the rupee appreciation is not helping, have we able to get any of the price hike at a customer level?
It's a continuous process. We are doing this exercise with the customers, but as of now, focusing the revenue is the prime target, and because of the cotton inventory which we stored in recent past, that is fairly we will cover up to next 3-4 months, so we will able to see the growth coming into coming quarters.
Okay. Understood. Thanks a lot.
For next quarter, at least there is a breather in terms of the additional cost in the cotton.
Understood, sir. Thanks a lot.
Thank you. Next question is from the line of Abhishek Agarwal from Prithvi Finmart. Please go ahead.
Hello.
Yeah.
Yeah, sir, my question pertaining to debt repayment with the subdued growth in this quarter, and demand outlook is also not so good. Do you think that's our debt repayment outlook, or there is any change in the debt repayment schedule thing?
No, there is no change in the scheduled debt repayment. On the contrary, we have been continuing making prepayment of high cost loans, and which we are also doing in the current quarter. So we are ahead of the schedule in terms of our debt repayment.
Okay. And sir, this related to my EBITDA margin. Earlier we thought that our EBITDA margin will be around 18 to 19%, and we enter into value added that bed linen part. Okay. but it significantly came down to 15% because of higher raw material price and some dollar appreciation and this thing. So what EBITDA margin do you think that there can be further pressure on the EBITDA margin from here onward, or how it is?
So we give the guidance on a year as a whole. So we expect that the company's EBITDA margins will sustainable basis 18 to 22%. So we continue to be go by that guidance.
Okay, sir. That's fine. All the best. Thank you.
Thank you.
Thank you. The next question is from the line of Abigail F. from CRISIL. Please go ahead.
Hi, sir. So I would just like to know, so do we have any plans of adding any capacity in the cotton yarn segment, saying that we have already reached 95% utilization?
So as of now, we are not, any plan to have any capex in that segment.
Okay. So even in FY19 or 20, nothing is
So
planned?
that I think it's too far. FY19 beyond, it's too far to say right now. But as of now, there is no capex.
Okay. And what kind of maintenance capex are we expecting in the whole year FY18 and FY19? If you would give me
about 100 crores a year.
100 crores each year. Okay. And also, sir, what is the outlook on cotton prices in Q4 of 18? I mean, do we see it coming down, or I mean, in Jan at least it has been rising. So in that context, in Feb or March, do we see it going down a little, and will it impact our EBITDA margins?
We wish that the prices will come down, but as of now, the things are looking that the quality cotton is not available. So the large manufacturers, which is serving who's and who's of the global customers, they need a quality cotton. So the good quality cotton is available at a higher prices. So that is the challenge in the current quarter also. And we see that there might be a range bound movement or volatility, but we don't expect much breather in that.
Okay, sir. And what has been our internal consumption for the 9-month ended period?
It's remain at a 33-34%, same which is during the last 9 months.
Okay, sir. And so do we expect this to rise going ahead in FY19?
Yeah, as soon as the utilization in bed linen and towel will increase, that definitely this 33% will go to 40-45%.
Okay. And how are we seeing our export markets? I mean, is there growth coming in from there, or are we focusing on domestic markets, saying that consumption spending is increasing in India?
No, we are focusing on domestic market, no doubt about it. The only thing that the growth which we are expected from the US market, that is not there in Q2 and Q3, and in fact there is a degrowth in these 2 quarters, particularly in our towel segment. And this is because of the destocking by the large US customers, and we expect that normalcy to come in the Q4.
Okay. So, and has our, I mean, I might have missed this out, so has our bed linen segment turned profitable at EBITDA level in this quarter?
Yeah, I'd say the entire bed linen segment is now EBITDA break-even.
Okay, that's good. So do we have any plans of repaying, prepayment of I mean, what kind of number are we looking for repayment in FY19 of the debt?
So we have scheduled repayment of around 300, but as against the scheduled repayment, we are targeting around 400 to 450 on a yearly basis.
Okay, sir. Thank you so much. Thank you so
much. Thank you.
Thank you. Next question is from the line of Paresh Jain from Bajaj Allianz. Please go ahead.
Yeah, good evening, sir.
Yeah, good evening.
Wanted to check, sir, what's happening on the paper side? How have the realizations moved? And if I look at Q3 versus 9 months, I think your margins are down in this quarter.
Yeah.
If I'm right. So can you just throw some light on that?
Our paper, the realizations have been flat on the current quarter-on-quarter basis. There is a slight softness in the realization by a marginal 1.5%. On the paper front, it is true that our profits have come down, But that's not for paper because we are also manufacturers of chemicals. We also manufacture chemicals, and within the segment of chemicals, which is a small business pie. However, in that particular segment, in this particular quarter, there has been an increase in the raw material price as well as there is a softness in the sale price. So that is why there is a slight dip in the paper and chemical segment, which will be offset in the current quarter.
Okay. So
more of a change in product mix.
Okay. So what is our product mix typically like, and what is it like in this quarter?
So, like the copier paper is mostly around, 52% if you compare the last 9 months, and this time it's around 48-49%.
Okay. And and what is the balance product mix that we have in the product mix? What are the balance different types of paper that we have out there?
So this is the two, papers. One is the copier and the other is the B2B paper. And along with that, we have a chemical business also. So the lower realizations and margins are due to the chemicals business.
Okay. But on a like-to-like basis, how have the copier realizations been like?
It's a flat. It's almost flat.
It's flat. And for the B2B?
It's again flat.
Flat only. Okay. So basically, it's a mix change which is leading to a fall in. Okay.
That's right.
Thank you.
Thank you.
Thank you. Next question is from Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yeah. Hi. Good evening, sir.
Good evening.
So basically, I just wanted to, in this quarter particularly, how we have seen the volume growth in bed sheets and towel.
You are talking of quarter 3?
Right.
So quarter 3, on an quarter-to-quarter basis, about 5 to 6% degrowth is there in bath and bed.
Okay, in both almost similar, or we have seen a slight difference between?
Almost similar, but on a 9 months to 9 months basis, the degrowth is about 12% in towel and growth of 44% in bedsheet.
In bedsheet, and how is our mix? If you look at how much would be our direct export in bedsheet and how much would be the domestic?
So domestic is about 15 to 20%, and about 80% is the international.
In bedsheets also?
Yes.
Okay, sir. Thank you very much, sir.
Thank you.
Thank you. Next question is from the line of Dikshit Mittal from Shubhkam Ventures. Please go ahead.
Yeah, good evening, sir. So you mentioned paper margin dip is basically due to lower margins in chemical business, right? So the 10 crore dip that you have seen quarter on quarter, is it purely because of that reason only, or maybe paper profitability has also come down?
Paper profitability is, a little impacted by way of the increase in raw material cost also, because we are using wheat straw as a raw material. So usually April to September is the season for that raw material, and October to October to March is the off season. So as a historically also it is the cost of raw material is a little higher in the second half as compared to the first half.
Okay, so sir, in this segment, 9 months margins of around 42%. Can we assume that is sustainable for next 1-2 years?
36 to 40% is sustainable. So beyond 40 is, as of now, due to the better demand in paper segment.
Okay. And sir, any guidance on next year's utilization levels in both bed as well as bath segment?
So next year for bed linen FY19, we are expecting 50 to 60% utilization levels. And for this bath linen, we are expecting 55 to 60%.
Okay, so bed linen, I think at full utilization you can do 1,000 crore, right?
Sorry? Yeah, that's right.
Okay. So, and sir, lastly, in chemical, can you explain a little like which chemicals are you in, and
it's a sulfuric acid.
Sulfuric acid. Okay. And what is the quantum, sir, in terms of top line contribution?
We do
negligible.
Yeah, it's a very small
quantity.
Okay, sir. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Vaibhav Goyal from SBI Life Insurance. Please go ahead.
So two things. Specifically, this paper mix change. What did you explain the reasoning for this lower paper grade, this print grade papers?
It was not only, it's a, due to this post GSC, particularly quarter two, all the dealers and distributors, they had reduced their inventory levels to zero. So, all stock pipeline inventory they had drained out, and that has impacted the quarter two more, and it has started recovering in quarter three. So, still in paper also, because it's a 85% about domestic market and 15% is exports. So due to that, post GST scenario, those things has, now stabilized, and we expect that paper again normal in quarter four.
Okay, sir. And sir, in chemicals you said a small quantity, but probably on the EBITDA side it would be still be so significant that it changes the margins. So, or if you can give the specific EBITDA margin, that would be great. EBITDA number, absolute basis.
So by the reduction in EBITDA on a paper and chemical segment, it's majorly due to the chemical segment lower margins, as well as the increased raw material cost of paper also. So because the chemical business is only having a 50 crores of a revenue, and on an overall basis, on a quarterly basis, it's around 12 to 15 crores kind of a revenues.
Okay. So thanks a lot.
Thank you.
Thank you. Next question is from the line of Pankaj Bobale from Axis Securities. Please go ahead.
Thanks for taking my question, sir.
Yeah.
Sir, our utilization for bath linen is around 40-45 40 to 50 for last 3 years. So is this a company specific event or it's industry specific? That's my first question. And second thing, what is the status of duty drawback and ROSL post GST, and are we still competitive, or do we have advantage against our Chinese competitors?
Yeah. So on your first thing, we have achieved highest utilization of 54% in towel business in Q4 of FY17. So post that, it was about 51% in quarter one, and now in quarter two and quarter three is the major impact when the utilizations came down to 42-43%. So on an overall basis, it is 45%. So these 2 quarters are impacted due to the, as I explained earlier also, that it is a more of a destocking by the some US customer, which we see that the normalcy comes into quarter four, and the growth start coming in quarter one of FY19. So that is the expectation as of right now. Coming to your second point with regard to ROSL and MEIS, it has been increased. ROSL has been increased to 2.2. and MEIS has been increased from 2% to 4% sometime in November, and the full impact of that will come in quarter four. So still we, as an industry, we are competitive with China and Pakistan as far as the US market is concerned. As far as Europe market is concerned, Pakistan is a bit, competitive in terms of exports.
However, post GST, there is a reduction in textiles, as export incentives have come down.
Yeah.
Come again, sir?
So post GST scenario is, now the incentives are at a neutral basis as compared to the pre-GST period.
Okay, so nothing has changed from pre to post GST, you mean to say?
Yeah, it's almost neutral now.
Okay. And regarding capacity utilization, is this seasonal? Does this happen every year in this Q3?
This lower inventories by US customers, happened every year, but this time the quantum was much higher.
Okay, and what gives us the confidence that their orders will increase henceforth?
Because overall their sales has not been degrown. So their inventory pipeline has been reduced. So obviously, because the sales are on a normal basis, so they have to fill up the inventories sooner or later. So we expect that quarter four will be the period when they start doing the, increasing their inventories in line with the sales.
Okay. Right. Thank you, sir.
Thank you. The next question is from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
So my question on this employee cost reduction that has happened in the quarter. Now you're guiding for 50-60% utilization for bed and 55 to 60 for towel. So that is still robust volume growth year over year. Then what was the need for man cost rationalization?
So, we had during these 2 quarters, we expected the volume growth to be happened during this. So we had employed the additional manpower also at that point of time, and due to overall, optimization of manpower cost in line with our, revenue, we had done this optimization exercise, which is started in Q2 and completed in Q3.
Okay. And on the bed sheet side, we are seeing utilization level of 50 to 60. So on the lower end, we are saying it could be 50 also. So which means that we might not have a big volume growth in FY19. Or are we confident that we will achieve that 55 to 60 exit run rate?
See, as of now, if you see the 9 months period, that destocking of US customers has not impacted our bed linen business. So reason being that their sales are being stagnant, and whatever orders we get in our bed linen business, they don't have the inventory levels. So the sales are, doing in a normal course of business. But yes, wherever we have a longer matured business like towel, we have inventories there in these US customers. So we, face that impact of destocking in our towel business. So going forward, we are, for a safer side, giving a guidance that it will be 50 to 60%, and that we are giving guidance for our bedsheet business for the last 1 year. So for FY18, we had given 40 to 50%. We are exiting at 50%, and we are, on an average, it's more than 45%. So next year also, we are giving on a year as a whole 50 to 60%. That means that we will exit at about 60 plus, but on an overall basis, it should be something between 50 to 60.
Okay, sir. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Riya Shah from Niveshaay. Please go ahead.
Hello.
Yeah.
Yes, sir. So I was asking that overall the top line of our company has not been increasing since last 2 quarters, if I see, and the bed segment, paper segment, chemicals, yarn, everything is in a profitable and volume growth is also there. So can I say that as soon as the towel volume growth comes in, the revenue will start increasing?
Yeah, that's right. That's right.
Okay. So, and sir, you guided in last quarter that this quarter will be quite a normalized quarter, and from the 4th quarter we'll see a growth. So, were these numbers as per your expectations, as per the normalized quarter?
We are saying that 4th quarter, it's a more of a normalized. We will, start, growth will be back in Q1.
Q1. Okay, sir.
So as of now, we have a flexibility in terms of if suppose towel volume is not good, we have a flexibility to sell that yarn to outside. So we are, offsetting the degrowth by having a better volume in our yarn business. So that's a kind of a, flexibility we have in terms of our textile within segments.
Okay, sir. Okay.
So as soon as the utilization improve, our, captive consumption will improve, and that will have a better margin on maybe on a overall sales basis. The growth will be there in terms of volumes. We will get a better margins.
Okay, so for the 4th quarter, there will be a normal revenue growth at least, right?
Yeah, that's right.
Okay, sir. That will be all. Thank you.
Thank you. Next question is from the line of Deepan Shah, an individual investor. Please go ahead.
Yeah, most of the questions have been answered. If you can just throw some more light on the cotton prices. You told us that cotton prices had come off and now they are about 10% higher in the month of Jan. Could you get some numbers in terms of what were the cotton prices in the 2nd quarter? What was it in the 3rd quarter and how is it now? That would help greatly. Thank you.
So last year, the average procurement price of cotton, during the season is around 120, 125 rupees a kg. So when this new season starts, it has came down to around 105, 108 rupees a kg, and from that point of onwards, the cotton inventories are started building up in quarter three, and now the price of cotton again touched to at around 120, 125 rupees a kg. So that's now the lower prices of cotton is available only during October, November, and some part of the December. So due to quality constraints, the prices are again moved up in January.
Okay. But would you be having this low-cost inventory which you will be using in the fourth quarter, or is it that it will come only into effect in the first quarter of next year?
So it's a we are keeping our inventories incremental also at a current prices. But yes, we do have inventories which we stored during October, November.
Okay. But you expect the average cost of cotton to be higher in the fourth quarter versus third quarter for your company?
Yes. So on a averaging out on quarter basis, the quarter four will be a little higher. But yes, it will be lower than the market as of now.
Okay. Thank you very much and all the best.
Thank you.
Thank you. Next question is from the line of Arjun Singer from Reliance Mutual Fund. Please go ahead.
Hello, good evening, sir.
Good evening.
Sir, Q2, as we understand, was a very bad quarter for yarn segment.
That's right.
For the industry as a whole. So,
yes.
Can you tell us, sir, what has been the EBITDA margin in the yarn segment, as in what has been the improvement in this quarter versus that quarter?
We are not reporting the EBITDA at a segment level, but yes, the EBITDA has improved in this quarter three as compared to quarter two.
Okay, I mean, could you say like 200 bips of margin improvement? That kind of thing?
I could not be able to give you the data. The only thing that we are into a integrated kind of industry where we use that yarn into our towel and bed linen business. So it's a invariably if we get a better margins in yarn, it will be lower margins in towel or vice versa.
Right.
So on we calculate the EBITDA on a consolidated basis. That is what we reporting.
Got it. Secondly, on this fundraising resolution that you had passed some time back, is there any update on that?
Sorry?
The fundraising resolution that you had passed, I think a few quarters back.
That we had taken an enabling resolution from the shareholders, so we will evaluate depending upon the opportunities and market conditions.
As of now, is there anything which is visible?
No, nothing.
All right. Okay, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Sahil Doshi from Birla Sun Life Insurance. Please go ahead.
Good evening, sir.
Good evening.
Sir, just wanted to understand on the bath linen with the degrowth which we've seen in volumes. Are we today able to break even on EBITDA level as well as PBT level, or what is the situation there?
In bed linen segment you are talking?
No, in particular towels, sir.
No, towel we are EBITDA positive.
Okay.
It is only the bed linen which was a new facility we started in last quarter of FY16. So this is the second year of operation for our bed linen. That was into a EBITDA negative. That has turned to EBITDA positive this year, this quarter.
Okay, but bed linen, bath linen in terms of towels?
Yeah, that's continued to be a EBITDA positive.
No, since our utilizations have gone below 50.
No, but that is the scale is much higher as compared to the bed linen business.
Absolutely. Okay, point taken, sir. Can you share the volume and realization numbers for this quarter for both towel and this bed linen?
You mean to say that the growth in realization?
Yes, volume growth as well as realization growth.
So year on year, about towel, it's about 11% degrowth in this quarter.
Okay.
And sheeting, it's about 62% volume growth in this quarter.
Okay.
And year on year, towel realization are about 3% higher.
Right.
And sheeting about 20% higher.
20% higher.
20% higher realizations.
Is that increase 20% higher? Is it because we are moving more from the grade to more of processing?
Yeah, that's right. That's it. Last year it was a more of a gray. Now it's a more of a processing.
Sure, sir. So second question is more on the other income, which has increased significantly. Is there some forex or what is the nature of that?
This is a regular treasury income because we do exports. So this is a regular forex income, which every quarter this amount has been very much consistent and constant. So this is treasury operations which we get on every quarterly basis.
It's a more of a Ind AS requirements which you have to show this on other income. Though earlier it was treated as a operating income. Now it's treating as other income as per the requirement of Ind AS. So we usually use it as a business income because of the majorly into exports.
Okay, sure. And so just wanted more clarity on this employee cost decline. You mentioned there's been rationalizations, I understand, but could you quantify in terms of how many, meaning what is the kind of cuts we've done, which areas have we cut this, and is it on the top or senior management level or it is across the board?
No, it is a more of a optimization. So rather than cuts across the levels, it's a more of a optimization. So wherever we feel that the fat is there, we had just take the initiatives in terms of how we can able to get into the normalcy.
Sure, but it's a 25% kind of a cut when we are trying to.
So we started this exercise in Q2 and it's completed in Q3. So now onwards, it's a more of a these certain restructuring also in terms of more we can able to link to the performance based incentives. So it will increase proportionately with the revenue.
Okay, so how do we read it as a normalized basis? Where do we want it? Do you want as what percentage of sales would you like it?
So it's not like that. It's basically that as soon as the you will get the revenue or you will get the more order book, you can able to enhance your manpower as well as increase the performance pay for that manpower also.
Okay. Fair enough, sir. Fair enough. And just the last question on the towel side, sir, have you seen this kind of destocking across retailers, across geographies, or?
No, it's a majorly by large customers in US.
Okay, but this is across
few of the large customers, not everywhere.
Okay. So
Yeah.
of this decline, how much would be contributed by a few top 3 or top 5 for you, or how is that? So are we seeing?
So it's mostly by the top few only.
Okay, but that will be 60-70% of your sales, or how do you quantify it?
No, so top 10 customers are about 60-65%. So the top 2 or 3 customers has adopted this policy.
So then, if that is correct, so then those top 3 would be degrowing by 20-30% kind of a thing. Is that correct?
That what we already explained, that the sales has not been degrowth. Their sales is continuing to be in the same line as per the last year. They had reduced their inventory levels to the lowest. So that's why the Indian exports has been dropped.
Sure, but would that quantum be negative 20-30% in those top 2-3 clients or this thing?
Yes, that's true.
Okay. Fair enough, sir. Thank you so much.
Right. Thank you.
Thank you. Next question is a follow-up from the line of Paresh Jain from Bajaj Allianz. Please go ahead.
Yeah. So just coming back on the paper, how are the current realizations today vis-a-vis the Q3 end or average?
So we are not reporting the per kg kind of a realizations, but on a 9 months to 9 months period, it's almost flat or a little 0.5% higher in the current 9 months.
No. I'm saying how the today's realizations and what's your what do you expect? How do you expect the realizations to move in the coming 3 to 6 months type?
Q4, it's a quarter on quarter, it's a better. So Q4 we are expecting a better realization as compared to Q3.
So this is like what, 5-10% increase in realization?
No. Not that kind of increase is there, because already last 2 years there is already been a significant kind of increase in realizations, and it's a more of a better demand which is governing this realizations higher.
Okay. And is the trend same across both B2B and the copier segment that you have?
Yeah, that's right. That's right.
And is there any, do we enter into any of these contracts, a quarterly or a 6-month contract with any of our customers, especially on the B2B side?
No. So there is no large contracts in paper. It's a more of a, current, so copier, it's, our inventories, and B2B, it's a only, make to order.
Okay. And you said that the copier segment volumes were lower in this quarter. Any specific reason for that?
So this is the post-GST scenario. Most of the dealers and distributors, they had drained out their inventories just to, zero on a D day. And after that, they will start picking up their inventories in a gradual manner.
Okay. Fine. Perfect. Thank you.
Thank you.
Thank you. Next question is from the line of Samir. Is a follow-up from the line of Dikshit Mittal from Shubhkam Ventures. Please go ahead.
Yeah. So my question is on margins in textile segment. So considering that now cotton prices have gone up, so do we see like current margins of 15.5% to be maintained for next year as well?
Yeah, that's right. We expect that to be maintained. So in fact, that will improve going forward as soon as our utilization in towel and bedsheet will go higher.
Okay, so like if I extrapolate, like you mentioned that the paper margins will be 36 to 40% range sustainable. So I think for next 1 year, it's safe to assume that you'll be at lower end of your guidance of 18% margin.
So as a guidance, 18 to 22% is the guidance for FY19 company as a whole. So in that, 18 is a worst case scenario wherein, you have some issues with demand or, your raw material prices are higher. But at the same time, when, these export incentives are also enhanced in this November period, and that will continue in the Q4 and first quarter of FY19 also. So that will have a positive impact in terms of margin expansion.
So considering the current cotton prices, on a company level, 20% margins are sustainable if nothing further happens.
So as a overall, 18 to 22% is the guidance. So that depends upon that how the cost of raw materials, the dollar sensitivity that will prevail going forward. So that depends upon that the worst and better side.
Okay, thank you.
Thank you.
Thank you. Next question is from the line of Samir Dalal from Natwarlal and Sons Stockbrokers. Please go ahead.
Yeah, hi. I had one question. You talked about volume utilization for the textile business as the towel and the bed linen to increase going forward to 50 to 60%. My question comes more on the side of, where do you expect the demand to come from? Are you looking at new customer acquisition? Or is the current customer already giving you a heads up on what kind of demand be projecting next year? So where exactly?
Sorry to interrupt, Mr. Dalal. Sorry to interrupt there. Your voice is breaking. So if you could just rephrase your question once again, please.
Sure. My question on the utilization of the textiles front, is it clear now? Hopefully it is. Where's that increase in utilization going to come from? Are you doing new customer acquisitions? What size of customer acquisitions are you doing? Or is it the current customers that have given you a heads up on what kind of demand they're going to have next year? I want to understand where you expect the utilization increase in the bed linen and the towels to come from.
So it is, for bed linen, there is no impact of destocking as of now. So we expect that utilization to increase by acquiring new customers or enhancing the business with our existing customers. Second, in terms of towel, the major in this Q2, Q3, the degrowth is coming from the lower inventories procurement by these US customers, and we expect that will come down to normalcy, in Q4. So we expect that major volumes will come from the existing customers as well as the growth from Q1 will as soon as the Q2 and Q3 when this degrowth in volume is there by the large customers. So at the same time, we had started acquiring the new customers and new geographies also. So that impact will will be a added kind of a impact when we get back the US customers demand at a normal pace.
Okay. Okay. So it's the same continuation to this question. You talked about the fact that you would be able to get some new customers for the bed linen business. Now, I want to understand, what is the competitive advantage on pricing or on quality? On what do you have that will bring these customers, because they're obviously already existing in the market and buying from someone else. So what will make them shift their buying towards Trident versus the current operator? So where does your advantage lie?
So our USP remains in the best quality at a best competitive price globally. So that is due to the technology we acquired, that is due to the integration what we had, that is due to the automation we have. So in terms of the scale, in terms of the technology, in terms of the integration, we definitely able to serve the best quality at a best pricing.
So if you say you have the best pricing, can you give us what is the differential in your pricing versus the nearest competitors? How much more?
I could not be able to give you the quantify into it. The only thing that we are into an integrated kind of industry where we have a facility which is from cotton to bed sheet. So all the processes, whether it's a spinning, weaving, or processing or cut stitch pack, everything is available under one roof. So we have a entire integration automation under one roof only. So that's help us in terms of better quality, better tracking of the fiber, better pricing on a overall basis.
Okay, and now last question: when you scale up your operations, when your utilizations go up, how much would your cost increase? Because you would obviously need to hire maybe more people. Or are you fully staffed up? Are you what would what I'm trying to get to is, what would be the operational efficiencies that come out of the increased volumes? How much more EBITDA could you generate from the increased volumes?
So see, there are two things. One, when we say that we are at a EBITDA break even, so we most of the fixed cost has already been absorbed. So it's only the variable cost which will be there as soon as we improve our utilizations level, and that will EBITDA will continue to be added at a PBT level. So when we say that the finance cost or depreciation, everything is already there. So as soon as we improve the utilization level, that will not only benefit in terms of the percentage expansion in the EBITDA level, but also at a absolute level also.
Absolutely. Now, can you quantify what at 60% utilization next year, for your bed linen which you're targeting, and whatever the utilization level you're targeting for the towels business, what kind of EBITDA percentage would you be able to generate at that 60%?
We have approximately 15 to 18% of fixed cost in overall textile portfolio. So since this cost is anyways absorbed in the existing capacity, so any additional capacity ramps up, so definitely it helps us by increasing the EBITDA margin by plus 20%, because 20% is the fixed cost which we are absorbing in our current profit loss account.
Okay. So would you be able to give a percentage number, what you could be EBITDA at 60%, just roughly?
Can you please come back to your question, please?
I'm saying if you do 60% utilization, would you be able to throw out a number? Like you said, your EBITDA neutral at about 48-50%. So at 60%, what would you be? About 5% EBITDA percentage positive, 7%? What would the number be roughly? Would you have any?
Around 3 to 4% EBITDA margin percentage would increase in case we can go at a top level utilization.
Okay.
But
perfect.
overall, since we are moving from 45, 42 to 55, 60, so EBITDA percentage points would increase by approximately 2 basis points, 2%.
2%? Okay, perfect. Right. Thank you very much. If I have anything, I'll get in touch with your IR people as well. Thank you.
Thank you. Thank you.
Thank you. Next question is from the line of Kaushik Dani from Reliance Wealth. Please go ahead.
Hi. We just discussed that the cotton prices have moved almost double digits from the bottom levels, and now roughly 120, 125 a kg. So what we saw in second quarter was that typically the cotton procurement was high, as well as the yarn booking was at a lower price.
Is there a possibility that we might have a repeat of Q4 in what happened in Q2?
So when that Q2, inventory losses has happened, so from that point onwards, we have already started discussing with our customers for, price hikes in terms of, so it's a gradual movement from that point onwards. It's already, certain things have been already passed on. So we expect that that kind of situation will not be there at least immediately in Q4 and Q1 of FY19.
Typically, can one safely assume that yarn basically booking will has to be a markup or something positive over the cotton prices, right?
Yeah, that's right.
Okay. Secondly, what I wanted to know was that since we said that the utilizations for towels will go up to almost 55-60 and for bed sheets to 60, so that means that home textiles should roughly have a volume growth of double digit around 10 to 15% for FY19 on the basic assumption.
Yeah, that's right.
So is that assumption right?
Yeah, that's right.
Okay. And if that is the case, typically, since last fiscal, typically, have we got new clienteles or customers added to our portfolio?
We have added few customers in towel business.
Okay.
So in bedsheet business, we had added in a quarter previous to that, but that is, started doing business in the current year. So there is a 3-4 months kind of a lead time for acquiring a customer and then start delivering to that customer.
Okay. And typically, how has been our retention rate like in terms of continuity of clients, let's say long-term client relationships?
We are retaining all of our customers as of now.
Okay. And my last question is, typically Forex does impact our overall revenues. As we know that, rupee has been appreciating and quite, on the higher grounds in past 2 quarters. So if let's say rupee depreciates by 5% as a thumb rule, what sort of impact do we get on the top line on the EBITDA?
Rupee depreciation of 5% is a very wishful thing at this point in time.
Yeah.
We all hope that it really depreciates by 5%.
Right.
But nevertheless,
so for the thumb rule.
But nevertheless, an approximate product value of 500 rupees, so it adds something like a 20-25 rupees a kg kind of a product sale price.
Okay.
But see, that is a more of a temporary phenomenon. Whether that rupee appreciate or depreciate, it has an impact only for a quarter or 2 quarters.
Right.
So at the end of that, when your normal lead cycle is over, either you have to pass on the benefit or you have to take the cost addition from the customers.
Okay, great. All the best. Thank you.
Thank you.
Thank you. Next question is a follow-up from the line of Giriraj Daga from Visaria Family Trust. Please go ahead.
Yeah. Just a few clarification. Assuming that what you are saying on the utilization comes true, what can be the normal employee cost quarterly run rate we should see in FY19?
FY19 employee cost?
Quarterly run rate or a full year basis?
So, see, at
approximately 5 minutes here. On FY19.
Yeah,
approximately 5 minutes.
Okay, rupees 500 crore for full year?
Yeah, full year.
Yeah, for FY19 full year.
Okay. If you can quantify how much, what amount of price hike we have taken in paper segment in January or December or Feb, or we are going to take in Feb?
No, it's a stable in this 2 quarters. So there is not much pricing increase. It's a more of a product mix which is giving a higher realizations.
Even in January or Feb, we have not taken any hike?
Yes. It's not a hike in the prices. It's a more of a product mix better realization.
Okay. Just a clarification. This copier was not impacted because of some China import or something. It's not because of that.
That is more impacting on the coastal side. So we are sitting in north is insulated from that import of copier paper from out of India.
Okay. My last thing is
because the logistic cost is higher, importing paper into north.
Okay. My last thing is that if you can just give a maybe percentage number, maybe not absolute if you are not okay with that. What is the increase in the Q3 between yarn and cotton spread, and what is in the, let's say, in January so far versus Q3?
We could not be able to report for January as of now. So obviously the Q2 was a little period when the realizations in terms of parity it is lesser. and quarter 3 it's getting back to normal.
Okay. Fourth quarter so far should be lower, right? Because of higher cotton prices? Compared to quarter 3 should be lower?
No, approximately around 4 to 4.5% has been the change between quarter 2 and quarter 3 in terms of yarn.
Okay. You're talking of spread, right?
Yeah.
Okay, and that's what I mean. The fourth quarter should again be a bit lower compared to quarter 3 average?
I think fourth quarter should be around these levels itself.
Okay, these levels itself. Understood. Thanks a lot and all the best.
Thank you. Next question is from the line of Abigail F. from CRISIL. Please go ahead.
Yes, I just had a couple of questions. I want to know how has our yarn realization done this quarter? I mean, last quarter I think we had a degrowth in yarn volumes as well as realization. So in this quarter, how have we done on that aspect?
So on an yearly basis, it's a degrowth of about 6% in terms of realization. But on a 9 months to 9 months period, it's a about 3% improvement in realization.
Okay, and volume wise?
Volume wise, yarn it's about 4% higher, both on quarter and 9 months year on year.
Okay. And so what kind of stocking levels do we expect to have at the end of Q4, I mean at the end of FY18, cotton stocking levels? So
cotton we usually have about 4 to 6 months kind of inventory levels at a March end.
Okay. So say like what was there at the end of FY17 along the same lines?
Yeah, that's right.
Okay, so that's all. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Over to you.
Thank you everyone for joining us on the call. Hope we could be able to answer all your questions. Should you need any further clarifications or would like to know more about the company, you can reach out to our investor relations team. Thank you.
Thank you, Paul.
Thank you very much, members of management. Ladies and gentlemen,